So we're here back again to talk, to look our balance for the week. Do we make profit this week, or we are on negative this week? So that is what we want to just look on now. I took series of trade this week. I took the Euro Swiss francs, of which I gained profit. I took the gold, of which I gained profit. So that is the trade that I took this week, this particular week. So now, if you see here now, you see that I'm on equity of $2018. The balance is $2018. The free funds $2018. So you can see that we are $18 above now. You can check my former video. You see that my former video. You see that I was in a balance of 1,990, but now we are in a balance of $2018. This is the balance we used to end this week. We use this balance to end this week. So today is Friday that I'm recording this video. So you will know that this is the last day of the week. So that is it. So we kept on pushing on this profit. We kept on pushing, and we are pushing, and we are pushing, and we are pushing higher. So this shows us that trading is profitable. But one thing is just now what I'm actually doing now is that I am trying to put a discipline, because the truth is that I am profitable. No doubt. I've traded for like 2 months now. This is going to 3 months now. This account has not been blown. This account has not been blown. So you know that I am profitable. What I'm going to work on is my discipline. Discipline in market. Like for the last 2 to 3 months, I saw myself entering trade on Mondays. I don't enter trade on Mondays before. And when I don't enter trade on Mondays, I see that discipline throughout the whole week. But when I started entering trade on Mondays, that discipline kept on reducing. So I want to start implementing that discipline now. No trade on Monday. Even though I see a very good setup and I see a trade going to my direction, I will not still enter into it. So that is the discipline I'm trying to put on this trade now. On my trading now. That discipline I want to just put. And I make sure if I progress on this discipline, that means I'll become that top 1% trader out there. So I have to just work on my discipline. That is what I'm seeing now. This account have not been blown, and we have been trading account for the past 2 months now. This March will make it 3 months, and by the grace of God, this month we should be able to push this account to about $50 upward. That is what I am looking at. To push this account, so it will not be to push the balance, so it will not be $2,050. That is what I'm trying to push it up to before the month of March ends. Before the month of March ends. So as you can see that trading is not something that is easy. I won't lie to you. Trading is not easy. This market that we're analyzing, it is never easy. It's never easy. But this is a journey, and it will be a successful one after this 2025 end. So you can see that I'm not saying that I'm on the top 1%. I'm not in the top 1%. But when I work on my discipline, I will put myself among the top 1% trader out there. All right, you can see how our account is moving and how we are gradually scaling our money. So if you have not subscribed to this YouTube channel, please subscribe, turn on the bell notification, like the videos. So let's turn over now, and I'll show you the trade that I took this week and the profit and the losses that I gained this week. So head over to our next screen. Thank you, guys. So hello guys, welcome back, and Let me just show you the trade that I took on Tuesday. So this one was my first trade that I took on Tuesday. You can see, so this is my support and this is my resistance here. My resistance here. So if you see here, price was supporting at this level 1, 2, 3. So it's a very strong support. The thing was broken, and when it pushed up, we call it liquidity swipe. The liquidity has swiped the market and is pushing up. So when the thing came here, I now took a trade up here, 1:3, and I made profits that particular day. 1:3 from here, and I made profit 1:3. So that one was the first trade that I took. Then the second one now was this now. So this one was one I took on Friday. That is today. I took this one today on the Euro Swiss francs. I thought that market is going to like go for an uptrend, but it was making a wider wide, and this wider wide needs to have a pullback before an uptrend. This one is very big. This wider wide was very big, so you need to have a pullback. It needs to have a pullback. If wider wide was very small, and I know that there will not be any pullback. So this one is different from this liquidity swipe. That strategy is different from this liquidity swipe. This one was liquidity swipe. Market can break the support here and push up. This one is a liquidity swipe. It's different from this. It's different from this. This one is giving a wider wide. And sometimes when you see this wider wide in the markets, when you see this when you see a resistance like this and a support like this, you see that the chart becomes wide. I don't have any name for it for the moment. So the chart becomes wide, and if the chart is very wide, then price will like tank down. Price will tend to like come down a little bit before pushing up for a buy. But this trade is still a buy trade. It's still a buy trade. Maybe on Monday or Tuesday or Wednesday, this trade will definitely go for a buy. It will definitely go for a buy. So what price is doing now is that price want to come down. It might touch one of the fair value gaps here or the other block here and start pushing for the uptrend. Start pushing for the uptrend. So when price goes down, so this is where I took it. I took it here thinking that I'll make profit immediately, and that was not a very good idea. And the truth is that on today, that is Friday, the euro market was not working. Today, that is Friday. So I went on the forex forecast to check it, and I saw that today market was not working. Today euro market and the Swiss franc market was not working today. So that is why we had a loss on this trade, and the wide was still much more bigger. So, and there was no liquidity swipe on this. This one we cannot call this a liquidity swipe. We cannot call it, because this one, the real swipe here was not much. Was not much. So cannot call it a liquidity swipe. Liquidity swipe was not intense. Cannot call it a liquidity swipe. So maybe on Tuesday or Wednesday or Thursday, this market is going to go for a buy. But yeah, I lost on the market. So I took a trade here. I think it came back to my stop loss here. So this one I took on Friday. Then I took another trade on gold. So this is the trade I took on gold. This gold trade, I took it on Tuesday. So this is it here. So this gold now has a liquidity swipe. So if you come here, you see that we are having a very strong support level here. We're having 1, 2, 3, 4. You can see the support level 5. A very strong support level that broke the structure of this market on the downtrend. It now broke the structure of this market with the downtrend. So this one is a liquidity swipe. So what made it a liquidity swipe now was when the thing was now going up. So when the thing went up now, you can see here it consolidated here. So when it now pushed again upward again after consolidation, I thought that it would go to come for sell. It not come for sell. It now pushed up again. When it now pushed up again, it now became a liquidity swipe. So this one now become a liquidity swipe. That's when I knew that, man, gold is going for a buy. So when it came here, you can see here that we are having higher high, higher low, higher high, and higher low. This higher low here is below more than this higher low. Yeah. So that's another second sign that this trade is still going for a buy. First one, we saw the liquidity swipe. Now we saw another sign again. And this one is was the last sign now. So here, I now draw a support and resistance. Here, we can see another liquidity swipe that came into the market. And we can see the volume of the breakout here. So when it reached this zone here, I now took my buy trade. So you can see my stop loss very tiny to make 1:3 or 1:4. And I was out in the market. I was out in the market. So this is how you generally scalp in the market. This is how you scalp in the market. When you scalp like this, oh boy, there is no how you will not make a lot of profits in this market. Maybe there'll be a time that I'll just settle down very well and explain this strategy for you guys, and you guys will understand this strategy very well. So number one is that if you are working with a liquidity swipe in the market, okay. So there are two strategies that I do use. Either you are working with a liquidity swipe in the market, or you are using this kind of strategy. Let me go back. Or, oh God. Okay. Or you are using this type of strategy. So either you are using liquidity swipe or you are using this type of strategy. This type now, where the market is spreading in wider way. You are using your trend line to draw this line here. You're using that trend line to draw the down one. You're not putting any support and resistance. You know, when we're using liquidity swipe, we are using support and resistance. But now you are having the market just like widening up. Things just widening itself up. So that isn't the strategy or isn't the right strategy. But one thing is that you need to know how to differentiate these two strategies. So this wide now, if you are seeing it very well on the 1 hour time frame, like now, if you come here on the 1 hour time frame, that is where it's like showing very well. Well, if you see the intensity here, you can see some red candlestick and the rest. So this in this 15 minutes now, you cannot deliberate whether it's going for a buy or sell. But in a 1 hour, you can deliberate that this market will definitely go for a buy. But when it comes to the 1 hour, when you're able to see this thing very well on the 1 hour, what you will do is that you have to wait for the market to like come down a little bit. Look at this fair value gap. Let it respect this fair value gap and push and push. So after respecting fair value gap, you will now know whether you want to take your profit, you want to take your trade. Yeah. So you allow it to respect fair value gap. Then when you now reach here, you will now still look for the intensity of that candlestick. So if the intensity of the candlestick is very strong, you can take your buy trade up and keep moving. So that is what I missed out, and that is what I forgot to like think. I forgot to think. That is why I lost on this particular trade. Don't worry, maybe I will just like take my time to explain these two strategies that I do use. The weeklies were very important. That one is even the best. That is the reason why that made me my two profit this week. This one usually still give me profit though, but if I see it on the correct manner, I'll have profit for this strategy. Okay, guys. So if you have not subscribed to this YouTube, subscribe, turn on the bell notification, and like all those videos. Still share my videos out because I'm really trying for you guys. Thank you.